Good evening. In this video, we are talking about the gold prices, and the chart that you are seeing here is the Gold Comex spot chart, and that is the end of the day chart. So what you find here at the end of the day chart, that somewhere in the region of July, in the mid-July, the prices of gold started falling somewhere from the price level of 1340. So this was the price when the prices were falling, and then they have a steep decline, taking out somewhere in 3 months. That means July, August, September, and even mid-October. So it comes around 3 months. And so what we find here on 6th of October, an interesting thing, this particular pattern in the technical parlance or with the candlesticks is known as piercing line, that the prices started way below where they have ended the previous day, went further down, and then came up and then engulfed the half of the body of this candlestick. And this was the beauty, was that it was accompanied by higher volumes than this fall was there. People were sick of the falling prices of gold, and so finally, if you see on this big day, the volumes were very less. So here is what you find, an interesting pattern which is termed as the piercing line pattern. And this piercing line pattern is one which starts or gives signals to what you can see as a uptrend in the prices. And so we have the next day the prices nudged a bit up again. And the second important point was that it was accompanied by higher volumes, and probably we are looking for a follow-on for the prices. So you have volumes on your side, a great pattern, a sustained bear run or a sustained decline in prices from a level of 1340 to 1180, which is around $160. And so what we can look forward is to that the prices can move forward till 1240 region, which will actually provide as a major, what you can say, resistance at this level. So because of this particular what you can say pattern, we actually were, what you can say, scrutinizing the whole movement in gold without even thinking of what the global growth is, what IMF forecast, or the recession or deflation out there in Japan and Germany. A second important thing that we feel here is this chart, and this is an hourly chart, and this is what you can think of. This was the pattern that happened, what we just saw in this particular chart. So what you saw here is that the breakout, that this was a trend line, and this trend line actually got on 8th of October breakout. So once this was a very credible and a formidable trend line, by they stopped the prices here, then they stopped the prices here, then they stopped the prices here, so on. So this was a break. 1220 will support this particular region, will support this even will oppose the lot of movement of the prices. And once this is taken out, then we can really understand that the prices are in the bull region and will move forward to 1240, which is around 1.5%. And at the Indian MCX prices turns out to be rupees 500, give or take a few depreciation of the rupee here and there. A lot of supply will come from these points, and so we have to be wary of this fact. A very important thing that happened on 7th of October is that the prices came down, tumbling down. There was no price action in the history, because this is like very rare price move from this region to this region. And so the prices moved down and then moved quickly, and they found support at this particular 1204, 1205 to 1202 region. And this was the support here, and which again, what you can say, validated our bullish hypothesis. Now what we are waiting for is not the breach of this trend line in particular, and then a new support at 1215, 1200 level. And if this happens and this move forwards, we can look gold for 1240 region, and then we can take the case from there. Also, we will be taken up by a follow-on of the prices from that particular piercing line. This is the beauty of the technical analysis, that with a couple of patterns, which is a piercing line here coupled with good volumes, and a support and a resistance and a trend line formation which probably stops the prices at a particular juncture, we can just mark our trades better. So obviously by looking forward in this particular region of piercing line, we went long on the gold after a sustained decline of prices, and till the time 12.5 to 12.02 is holding, we will put up that case as ours. Again we will have the trailing top losses, and again the new support is found at 12.14, 12.15 to 1200, 12 levels. Thank you.